Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Tuesday morning, November 13th, with your grain market morning commentary. Currently, we have corn trading 4 to 5 cents better, soybeans are 8 to 10 cents better, and wheat is unchanged, a little lower, a little better, but right around unchanged right now. In the outside markets, we have the dollar up, we have the treasuries up, and it's a bit of a risk-off day. We have growing concerns about global demand for grains. We're seeing, continuing weakness in the whole global economy, and we're headed for this fiscal cliff here in the U.S. So the outside markets aren't giving grains any support, but this correction that we're going through right now, very sharp in the soybeans, really began on Friday's crop report when the USDA added about 1.5 bushels more to the production. So while we've had very good demand at all these different price levels, all the way up, to $17.50 down to $15, we're currently trading very close to $14 in the January contract. 14.05 is the key level that needs to hold, and what we have is a bunch of fund liquidation here. It's not so much about the fundamentals. We still have a tight supply. We've had good demand. There's one school of thought out there that says, hey, demand has been so good from China that maybe they've done enough, that they're done buying beans. I'm not sure that, I buy that theory, but that's, what some are saying out there is they're done for a while, and that's kind of pressuring the market too. January soybeans have taken $1.20 a premium out of the market since last week's highs, and it's very hard to say, when the funds are done, they're done. That's it. And at some point, I'd expect that this market recovers at least, to the $15 level or so. We've quickly become oversold, and we should at least get, a technical bounce in here somewhere. At some point, maybe further down the road, it becomes necessary, but at some point, prices will go up because we need to make sure we make it from, one marketing year, to the next crop before we run out of grain. So beans are so weak right now. They've dragged the corn lower, they've dragged the wheat lower, and some levels that are very key right now that you should keep an eye on. Into corn, that $7.05, $7 range, that's key. That needs to hold. Soybeans, January contract, 14.05, that needs to hold. And into wheat, it's around 8.35, 8.40 area. If these levels of support aren't able to hold up, then we can see the market continue to decay and lose premium here. And a lot will have to do with what happens in those outside markets too. So keep an eye on the outside markets, watch those levels of support, and if the market starts to find buyers at those levels, we can see a sharp recovery, especially in the soybeans because it was such a sharp sell-off. Some other trades that I'm interested in, I'd be happy to talk about, but we just don't have the time here. In the soybeans, start looking at that bean-corn spread. You buy soybeans, you sell corn as a spread. In the corn, I like the old crop, new crop trade. There's definitely something there to look at. And in the wheat, I like the wheat-corn spread. So I'd be happy to discuss some strategies there. Feel free to give me a call. My number is 800-826-4124. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.